today there is going to be another stablecoin meeting with the banks and the crypto companies because they need to get that bill done. In addition, there is a big World Liberty Fi event going on now. So I'm going to recap some of that to you today. Most likely it'll be tomorrow because we'll have the entire picture. But again, World Liberty Financial or Finance, however you want to call it, they are one of the Trump family's crypto companies. It is not directly run or owned by President Trump. And it's one of those things that I don't necessarily agree with. I think it should have waited until we got some sort of crypto market structure, because one of the things that's holding up the crypto market structure is Trump's involvement in crypto and the meme coins. Okay. And I think it was very bad politically for them to execute that as they have, and they should have waited. And I get it. Both sides practice insider trading. Both sides are able to invest and they have previous knowledge of various things that are happening. And it's unfortunate. And it is what it is. But at the same time, this was a very bad look and it was essentially damaging to the crypto community. But I digress. There's not a whole lot that we can do at this point. Now, we're also going to be talking about BlackRock because it looks like there was a very interesting investment into the IBIT. And there's a lot of speculation about that. BlackRock's IBIT is Bitcoin spot ETF. And we're going to talk about some of the ghost money that's flooding into that. Maybe it's Abu Dhabi, maybe it's Jane Street. We don't know. Well, we'll get into it and talk about it. Plus, we've got a lot of XRP Ripple news that we're also going to discuss. But welcome back to the O Show, everything crypto every day. I'm WendyO. Make sure to like, comment, subscribe, and of course, set alerts. And let's go ahead and give a shout out to our channel members. And again, you guys have got stuff going on at the house, so I'm going to do the best I can to be present with you. Thank you so much to Lawrence for the $10 super chat. If you guys don't know, if you're brand new to the channel, I've got a 9-year-old that is my absolute world. I talk about her often. I never show her face, but we talk about her. So I went ahead and I posted a story on my IG over a little thing that I found on the living room ceiling. So you guys will have to go watch that. That's what Lawrence is referring to. Thank you, Lawrence, for the $10 super chat. Hello to Mr. Dale, to Mr. Mike. Thank you guys for showing up every single day. Gorgeous Alexandra here as well. And we've got Logan with the $9.99 super chat. Thank you so much for being a doll. Ooh, we have Mr. Mixing all the way from, I don't know where he is. He's very spooky over there. Very spooky ghost money. In addition to that, we've got Mr. R. We've got Mike again. We have CJ Ward. He's starting to pop into the live streams. Appreciate you being here, kind sir. Music J. We got our Spark Water. And who else do we got? Oh, Bubba Davis. And Bubba Davis has gifted some more O Army membership. So if you become an O Army member, it's like a couple bucks a month, but I give you guys special shout outs. So again, Bubba, thank you so much for your support. I greatly appreciate it. And because of you guys, I'm able to be a stay-at-home mom and work. And it's one of the best feelings in the world, being able to provide for your family and being very present in your kid's life. Because gosh forbid there's an emergency, guess what? I just get to pick up and go and tell you guys, peace out. I'll be back later. But shout out to the Casual Chase, Modern Canadian, Love Canada. We've got Top Gun, we have Alfredo, and we have Cole. So let's go ahead and get into it. There is a lot to cover today. A lot is going on. And I washed my hair. Actually, it looked kind of nice today. I had to get ready in the other bathroom, so I don't have the lighting and stuff. But yeah, I'm doing little things to the house here and there. All right. So let's first off get into it. Okay. So this is from Mr. CZ Binance, okay? And he is over at the Mar-a-Lago at the first World Liberty Forum. They bring together crypto and policy and all kinds of stuff. So CZ is here. And as you guys can see, he's chatting it up over there. Beautiful crown molding here. Absolutely love it. But he said he's listening to the CFTC chairman talk at WLFI Forum in Mar-a-Lago and learned a lot. So yesterday, so that's what's happening today. And there's a lot of prominent speakers there in the crypto industry, in public servants, etc. Also, too, we had Brian Armstrong from Coinbase there alongside Miss Nicki Minaj, which is very interesting. The crypto, we've really seen crypto merge together with everything, with life, because that's what crypto is for. Crypto is created for the people, by the people. All right. Now, with that being said, let's move. So we've got that event going on. I'll have more info for you. But now let's talk about, remember yesterday we talked about the CFTC Commissioner Sled coming out and talking about prediction markets and saying that they're fine the way they are. It's the CFTC's jurisdiction, and they're like arguing back and forth with the states, and the states are mad. But the states aren't mad about lottery tickets or scratchers, and they're not mad that those are specifically placed in low income neighborhoods. I grew up around that, so I can speak on this. They're not upset about that. They're more upset about prediction markets like OG, prediction markets like Polymarket and Kalashi. And the cool thing about platforms like OG and the others is that you can transparently see what the general public thoughts are on various subjects. It's incredibly transparent. With lottery tickets, it's not. So that's always pretty interesting. So they're kind of going back and forth about that. But according to Miss Ellie, what's going on at the White House, so it looks like two familiar sources say the White House is considering another stablecoin yield meeting between the banks and crypto representatives on Thursday. No plans have been finalized. However, if she's reporting on it, she's incredibly accurate, great friend of mine. And in addition to that, they are going to have to get a deal done. They have to get a deal done. There's multiple clips of different folks all over talking about the deal needs to get done and why it's so important to get done. And the reason why it's so important to get this done is because if we lose the majority of the pro-crypto people, because again, midterms are coming up, then we can get some nasty crypto regulation in, and we don't want that. We want pro-crypto regulation that not only protects consumers, but also allows you all to get your yield on stablecoins, because that's important. We obviously want developer protection, just as if they create code, they should not, and they don't do anything malicious and not breaking the law. Shout out to the Samurai Wallet dev serving time and Mr. Roman from Tornado Cash. They shouldn't be held liable for that. But the yield on stablecoins is a big deal. Not only would it impact DeFi in a negative manner, but would also impact your ability to take your money where you are treated best. And I actually was on the phone earlier this morning with a pretty large MSN media outlet talking about stablecoins. Hopefully they publish the story, but we'll see what happens. And I really made my voice heard as to why stablecoins are important for the average person. There's no barriers any way, shape, or form. And if you want to get a little bit of yield on that, and I told them, and these are my exact words, what I told them, if I want to be able to hold on to my money and own it, not only should I be able to, but if I want to earn a little bit, like an extra $500 a year, take my kid to Disneyland, Lord knows it's expensive now, or not, or just out to dinner or little family vacation, earn that extra $500 with yield on stablecoins, I should be able to. You should be able to. American economy is hurting, and that's exactly what I told them. I keep it real. And I'm very, very blessed. Now, another thing that was brought up here was the banks. They say that they could lose up to $500 billion in deposits if rewards are allowed. And crypto firms are fair and necessary to compete with unregulated options. That's what crypto firms say. And the disagreement is blocking progress on the Clarity Act. Now, one of the things I want to talk to you about when we talk about the deposits, okay? If the banks care so much about deposits, then they should offer the yield. The bank should offer the yield. They say, you know what? We have this segment. We have these customers that are interested in these types of products. So you know what? Let's go ahead and offer them these types of products so we can keep our deposits. They don't want to do that. They want to do everything but provide you with customer service. They want to do everything but provide you with options that make sense for you, that pay you more, and then impact your bottom line. They don't want you to leave. They want to keep you stuck. They want to keep you enslaved. That's what the traditional financial system is. And you can get mad about crypto all day long, but at the end of the day, crypto matters. And if you want to earn a little bit more here and there and you understand the risk, you should be able to, but they're just worried about their deposits. And the reason why they're worried about the deposits is because they loan your money out and they profit off of it. But they don't want to pay you. They don't want to pay you 5% yield. They don't want to pay you 2% yield. They want to pay you less than 1% yield. And they want to continue to profit off of your hard work. Just like the U.S. government and taxes. So there's that. So we're getting closer. It's just going to take some time. Now let's go ahead and talk about this magic ghost money that happened, because and this has to do with BlackRock. Now with BlackRock, I'm going to remind you guys, you always, when we talk about traditional finance and we talk about the crypto industry, we talk about is any type of money, always follow the money. Crypto is transparent and it allows you to do that. When we're talking about IBIT or the spot ETFs or anything else, it's a lot harder to track. And that's exactly what I told the reporter this morning. I told them the difference between stable coins and knowing that they're backed and they have enough reserves and X, Y, and Z is I can check 24/7, 365 on chain with a couple clicks. With the banking industry, can't do that. With the Bitcoin spot ETF, IBIT from BlackRock, I can't do that. The way that they are required to report is not as transparent, and that's why they're absolutely terrified of crypto, and that's why they're diversifying. That's why they've gone ahead and put that out there. Now, let's go ahead and talk about this. So, Abu Dhabi wealth fund, Mubadala, Mubadala, apologies if I mispronounce, increased their IBIT holdings in quarter four. The fund reported owning $630.6 million worth of IBIT. Another Abu Dhabi wealth fund, Al Warda, reportedly owning $526 million. So it looks like traditional finance on a global scale is very interested in what BlackRock is doing, especially the Bitcoin ETF. And it's interesting to me because these guys can go ahead and just buy Bitcoin themselves, but they choose the BlackRock Spot Bitcoin ETF. They choose the paper Bitcoin. Interesting, right? Now, some more. Jane Street bought 7.1 million IBIT shares were 276 million in quarter four of 2025. Again, IBIT shares are different than actual Bitcoin. One IBIT does not equal one Bitcoin. Because again, with Bitcoin, you can own a portion of a Bitcoin or a fraction of a Bitcoin. And now holds about 20 million plus IBIT shares worth 790 million. It's the same entity to be behind the daily 10 a.m. manipulation push to lower Bitcoin prices. Now, we're talking about traditional finance on a global scale. A lot of people talk about manipulation in the markets. Well, is crypto manipulated? Everything is manipulated. But can you easily track this? You can. It was a lot easier for you to track before Bitcoin spot ETF, which is pretty interesting stuff. Now, again, there's a lot of rumors that essentially the market is being pushed down. And before we go on a little bit more about the ghost money and whatnot, I want to show you guys the current crypto chart. Now, WLFI, World Liberty Finance, is up about 17% because, of course, why wouldn't it be? But as far as Bitcoin goes, we're still operating that 4-year cycle. And when people say, oh, they're pushing price down, is it really being manipulated that bad? Is it? Because again, we technically are in a bear market. Number has been going down. It's been dropping significantly since the week of January 12th of 2026. We're trading below the EMA 200. On the weekly, we need to see exactly where we close. But moral of the story is, and I've talked to you guys about this a lot, is that we have been, anytime we enter into a bear market, we will generally trade under the EMA 200 for about, like almost a year, maybe 9 months. We did it in 2018 to 2019. We also did in 2022 to 2023. So March, April, or June, July, August, September, October, November, December, January, February, March, 10 months. From 2022 to 2023. And again, I'm bad at math, so don't get mad at me. And then we had the other dip below the EMA 200 that happened over here, November, December, January, February, March, April, 6 months. So we had a 6-month trading underneath the EMA 200 back in 2018 to 2019, and then 10 months from 2022 to 2023. So to me, this is standard price action, and it doesn't necessarily look like manipulation because essentially we're still operating on the 4-year cycle, but that may change. Now, Ethereum is trading under 2,000, Solana 81, XRP 144. XRP is actually holding on nicely to the EMA 200 here. So we'll see kind of what happens with that. But again, if you guys want to trade with me, we're over on iTrust. The reason why we're on iTrust is because not only are they pretty secure, they've got all kinds of different things like staking. You can invest in precious metals if you decide to do so. And they're giving you $100. $100 to match your deposit up to $100, I believe. We got the code down there. All right. So that's what's going on with Bitcoin. So I don't really think there's manipulation, but it's interesting to see all the different money that's coming in. Now, this gentleman over here, Jeffrey Park, posted something caught my eye in the latest 19.3 filings. Again, with crypto, you can verify on chain. With traditional finance, you have to wait until filings or reports and different things come out. So this is where the ghost money is, and apparently it's from China. And the reason why this is relevant is because, according to him, Bitcoin Chinese investors cannot legally hold Bitcoin. Now, the Chinese government, they own a lot of Bitcoin, and people can still technically hold Bitcoin in China, but there's caveats with that. And again, I've talked to people, I've got friends over in China, and it's banned, but it's not, but it is. So I feel like retail could probably hold it and has a better chance at holding it, but the institutions, the big players, they're not able to. But it looks like they technically can through the IBIT, which again, we got Abu Dhabi money, we've got USA money, we've got Chinese money now. So a new 13F filing shows Lalore LDT as a major new entrant in IBIT with a single 436 million Bitcoin holding. They bought most of the IBIT shares in quarter four. The entity is based in Hong Kong, and the firm has no public footprint. I'm going to come back to that in a second. Because I got to cook on that. The filing is made under, apologies, Zhenghua. Apologies, I butchered that. But apparently it's a very Chinese common name, making it effectively anonymous, probably like a John Smith or John Doe. The LTD in Lahore suggests an offshore structure, which is a typical vehicle for accessing U.S. markets. They are not a diversified fund, and it is a dedicated Bitcoin access vehicle in institutional form. I've got more to cook on that too. Likely explanation is that Chinese investors cannot directly hold Bitcoin, and this may be a regulated route for institutional Chinese capital to enter. Suggests possible Chinese capital flight into Bitcoin via regulated U.S. channels rather than gray markets or exchanges. So these guys are technically legally able to enter into Bitcoin, and they're doing it through BlackRock. Couple things I want to talk about here. Traditional finance is not transparent in any way, shape, or form. People are able to hide under LLCs and shell companies and do all kinds of shady stuff. So if you're somebody that's like, oh my God, like Bitcoin's bad, blah, 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 it's really not. Because you can trace back to one address. With this, you can't. You have to make assumptions with it, and you have to kind of dig through hoops. Now, the firm has no public footprint, which again, essentially makes it anonymous. So you don't know who's really holding this Bitcoin, as opposed to somebody with an address. You see the issue there? Traditional finance, they will say, is safe. You know where the money goes and whatnot. It's not. This proves it right here because they still don't know. They still don't really know for sure. Also, they're saying it's a dedicated Bitcoin access vehicle in institutional form. So what this is telling me is that big money is coming into Bitcoin in areas that it wouldn't necessarily be able to enter, and they're doing it to make themselves safe. And that's why it's only a Bitcoin fund or holding, or however they're structuring it. And they're just holding Bitcoin. So if they get in trouble or somebody comes after them, their other assets won't be seized. And this is why I scream at the top of my lungs that traditional finance, the stock market, all of it is incredibly predatory. It's all about if you have access to capital, you have access to the best CPAs, the best attorneys, and this is globally, and people that can help you set up structures like this, that are well-versed in this. Retail doesn't have access to it. Therefore, because retail doesn't have access to it, we should be able to do what we want to do with our money. So we can build wealth like this. But, they think we're too poor and stupid, and we get screwed out of options like this because of the way the system is set up. And I'm a big believer that if you can show the government that you are well-versed, that you should have access to invest in anything you want. But, oh boy. Now let's talk a little bit more about BlackRock. So BlackRock begins acquiring Ethereum for upcoming staking ETF, and they purchased BlackRock affiliate purchased 4,000 seed shares of the fund for $100,000, providing the initial capital the trust will use to purchase the Ethereum. The filing estimates the staking yield to average out annually to 3% using early 2026 benchmarks, which is amazing. So basically what BlackRock is doing, they are going to be adding staking to the Ethereum ETF, which will generate more passive income for their customers. And this is actually a positive thing because we will start to see more demand for the Ethereum ETF, aka Ethereum, even though it's paper. And the reason why is eventually, when the markets essentially kind of recover and things level out and we get clarity, there will be demand for Ethereum. And even though when an entity like BlackRock enters and buys and doesn't necessarily move the market up right away, it's going to help establish a floor in the long term. And this also tells you where smart money is going. And if they get access to the passive income, why can't we get access to yield on stablecoins? Why can't we get a 3%? Food for thought. And again, that's BlackRock's chosen one, or traditional market's chosen one. Now, this story came out about Arizona. So Arizona's Digital Asset Strategic Reserve Fund bill officially cleared the Senate, and now it advances a little bit. And the cool thing about this, which again, there was a little bit of a rumor here. So the Arizona Senate Finance Committee approved Bill SB 1649 in a 4-2 vote, which creates a state-run strategic crypto reserve. Now, with the state-run crypto strategic reserves, you guys are going to see this a lot. It's got virtual coins. It basically says anything crypto, but they specifically say Bitcoin, DigiByte, XRP. and stablecoins. And the reason why they're saying that is because when we're talking about a strategic Bitcoin fund or crypto fund through the states, they are not to use any taxpayer dollars to create these funds. They are to use confiscated crypto. So it seems that somebody got in a little bit of trouble in Arizona. They got their Bitcoin taken, their DigiBuy taken, and their XRP taken. So it will automatically be added to the fund if it does in fact get approved. But now they have to wait for the Senate. It still needs a full Senate, House, and governor approval to become law, but we are very much on our way. Now, moving forward, well, there's some really good news for XRP. XRPL Ledger activates members-only DEX upgrade aimed at regulated institutions. We had talked about this in the past, about how XRPL has it's not necessarily a portion of it, but part of it, even though it's decentralized to an extent, not really. Bitcoin is more decentralized. You guys fight with me all day long about that. But they activated the XLS 81 permission DEX amendment supporting gated on-chain trading venues for approved participants. So it's essentially a little upgrade that they have going on, but it's for institutions. It's not for retail. Now, the rollout follows the recent launch of XLS 85 token escrow, expanding conditional settlement to issue tokens and stablecoins. It targets banks, brokers, and regulated players seeking blockchain settlement and liquidity. And it creates a members-only trading venues with KYC and AML checks. It keeps native XRPL mechanics, but access is limited to approved participants. Very similar how... Actually, I can't even, it's really hard for me to compare that to Ethereum, but it would be like issuing a smart contract on Ethereum. XRP, Ripple, or just really Ripple in general, it's for the institutions. And that it is what it is. So they're building it out for the institutions, which is fine because your bottom line will be impacted with your XRP holdings once that starts to take off again and the market is fixed. But as far as decentralized goes, and as far as giving equal access to everybody, you're not going to get that with Ripple. You'll get that with Bitcoin, and you'll get that with other cryptos, not stable coins, but you'll get that with Bitcoin. And that's not a Bitcoin this is not a Bitcoin versus XRP thing. This is just is what it is. So you guys can be mad at me. It's fine. We can respectfully agree to disagree, but it allows for liquidity to come back to XRP, which is what you guys are holding and what you guys like. So I have to go ahead and say that. And you guys know I say my piece. I always save my piece. Now, Wells Fargo came out. Sees YOLO trade driving $150 billion into Bitcoin and risk assets. So Wells Fargo strategist said bigger tax refunds may receive retail risk taking by late March, potentially sending fresh cash into Bitcoin and momentum stocks. Now, I want to talk about this a little bit, Mr. Wells Fargo. Okay. Yes, if we do get if large groups of people get stimulus checks and they get a larger tax refund, we could see money being put into Bitcoin 100%. However, I just spoke with a good friend of mine that I believe they make $70,000 a year and they are living in LA County. This is the least amount of money they've gotten back on their tax returns since like the last 3 years. So I'm not really sure that people are going to be getting more money back. I know I'm in a different tax bracket than this person. And I think that they're in that really weird tax bracket to where you make like 70 to 120,000 in Southern California and you just get completely screwed. So I think that's a tax bracket they're in, but I'm going to have to disagree with Wells Fargo on this story. I don't think that it's really relevant. And I think America is in so much debt right now. I just don't see, I'm not seeing people put money into crypto, especially Bitcoin, not at this time. I don't know. I could be wrong, but since we're talking about economy, long-term unemployment is becoming a status quo in today's job market. And I agree. It's a very unfortunate thing happening. And again, we have credit card debt that's up at all-time high. We have all different types of things that are happening. But according to this article, 1 in 4 unemployed people, or 1.8 million Americans, have been looking for work over 6 months. Entry level and young workers are struggling the most, and some take lower paying jobs, part-time work, or moving with family to make ends meet. Job seekers report stress, loss of confidence, and feeling ignored by employers. And I agree with them 100%. It's absolutely atrocious what is happening. It really, really is. And that's another reason why I continue to advocate for you all to really dive into AI and figure out how you can improve your skills when you're, number one, to keep your job, number two, to enter the job market, and number three, to set up AI agents so that they can earn money for you. Because long-term unemployment is rising and it's becoming more common. And I'm not exactly sure how we are going to sustain. I'm not, but, and I'm like, again, I didn't think that people would be putting money into crypto during the panorama, but I was wrong. But I'm a little bit too conservative. Now, really quickly, if you're into SUI, Canary Capital Stake SUI ETF is now trading on NASDAQ, and Grayscale's SUI Staking ETF is also starts trading today on NYSE. So if you're a big SUI fan, which I think I have a little bit somewhere, that's up there. But let's go ahead and get into this story about Bitwise. So we know that there's like a war on prediction markets right now, but interestingly enough, Bitwise is applying for a prediction market ETF. One is for a Democratic winner and one is for a Republican winner. Also filed 4 ETFs for 2026 midterms predicting party control of the House or Senate. Weird thing, because you could just use something like OG markets, but I digress. But, moving forward with Bitwise, this is a great piece right here by Mr. Matt H. And we like to cover his stuff a lot because he gives a different perspective. He says DeFi could lead us out of crypto winter. So I want to talk about, give you guys some key points and talk about why. So he says that bear markets create opportunities for investors who pay attention, and next bull market will likely focus on fundamentals. DeFi has real users, real revenue, and real businesses behind it. The problem is poor tokenomics. Most tokens don't share in protocol revenue. The structure was designed to avoid SEC securities classification, and institutional investors are starting back into DeFi projects. And you know what? I agree with him. I agree with him very, very much. And the reason why is now, once we get the Clarity Act, then we will know exactly how to move forward. Builders and people that are creating DeFi protocols, they might be modifying some of their DeFi protocols. Sorry, I got a little bit cold, but they might start modifying all this stuff. And if they start modifying it and the tokenomics become better, plus we have all the AI agents that are doing all the work for you guys, then we could get the boom. And again, I've told you, my trifecta, AI, DeFi, RWAs, with a little hint of privacy. And I think that is a great case for the bull run. And again, as AI is progressing, we've got really intelligent people in crypto that are also building with that. And I think by the time we rebound, that'll be our sector. And then one and done. We're all making $100 million each, right? XRP's going to 589. Now, oh, I didn't see this. California begins enforcing state-level crypto licensing with DFAL. So crypto firms serving Californians are mandated to secure this license application by mid-2026. Mr. Newsom signed it, and it creates a BitLicense-style state crypto regime and adds oversight for many digital asset businesses and kiosks. All right. Well, really quickly, Michael Saylor said we are in the middle of a crypto winter, but spring is coming, and I agree with him. On this. It is coming. We just got to be patient. Now, it covers crypto services and kiosks. Missing deadline can lead to enforcement and could set national compliance standards. So this is the thing. The Bit license is incredibly predatory. It's very expensive and it's hard to do. So this is on brand for California. The reason why it's on brand for California is because they make it incredibly hard to do business here. Our taxes are high. We have so many different licenses and permits and different things that we need to do that make it really, really, really hard, not only to comply, but to thrive. For example, one of the houses I lived in, I wanted to get a pool put in. A house that I had put an offer on. Well, I was told that the pool would cost, just to get all the permits and stuff, it would cost 5 figures, and it would take about 6 months to get the permits done. So I ended up not buying that house. The house that I sold, that I now have had an issue with the roof because of non-disclosure from the people that owned it. Well, guess what? When I wanted to get it fixed, the permit process would have held everything up by 6 months and increased and added tens of thousands of dollars to the actual fix. So disclosed everything and sold it, did it the right way. California will always continue to bite its foot off or bite its nose off. What does that saying go? I don't know. So there's that. Anything else? Oh, there's going to be some tax changes with the Form 1099-DA. I'm working with my CPA, Scott. We're going to get that out to you. Also, too, if you need crypto tax software, we've got the 20% off down below. You plug stuff in, plug and play. Highly recommend you guys check it out. But yeah, I'll be updating you on that. Base is there. Hold on a second. Do I have the right story? I might not have did it. Phantom MCP. Agents can swap, sign, and manage addresses across all of Phantom supported chains. Ready to work with Claude, OpenClaw, or any MCP compatible client. What does this mean? This means that AI is continuing to pivot into crypto. Why does this matter? Well, if Phantom is setting this up, others will follow soon. And my prediction will most likely come true about AI agents and crypto. Now, with that being said, I'm going to go because why not? I appreciate you guys being here with me. I want to give a quick shout out to the channel members. Hey, Mr. Gamer. Hey. Who else is here? Do we miss anybody? I think I said hi to everyone. No pigtails today, Mr. John Legend. Let's see. Yeah. All right. Well, I'm going to get going. I got some more content to put out for you guys. And anyways, I'm sending y'all love and light. And I will be back 2 p.m. PT. Got a video coming out for you probably about Ripple. And then 6 p.m. PT, the complete news wrap up. Bye, babies.